Hey traders, Ethan Roberts here from Mastering TQQQ Trading. Today we're going to look at how TQQQ could make you $1,000 or more in less than 5 minutes. So let's go. All right, $1,000 or more in under 5 minutes trading TQQQ. Is this really possible, or is it just hype? Okay, I know some of you are getting your pencils sharpened already to give me a hard time in the comments section. You're going to say, well, we can't really do that. But I'm going to tell you it is entirely possible to do it with TQQQ. And I'm going to show you several examples of when we had situations occur, even recently, where it would have made perfect sense to make those kind of trades, and it really would have paid off for you. Okay, there was a beautiful example of it just the other day, Friday, July 10th. So I'm going to tell you, not only is it possible to make $1,000 or more in under 5 minutes, but this unique situation often puts in a low for the day and can lead to even greater profits if you stay in the trade longer. This is your choice to make as an investor. You can scalp or you can go long. You can even swing trade it if you want. And I'm going to show you where those lows are for the day. But first, and of course there's always a first on these videos, right? Let me tell you why this happens. TQQQ is one of the most volatile ETFs in the stock market. It has a beta of 3.4, and remember that 1.0 is the average of the total market. So you're looking at an ETF that is over 3 times as volatile as the total market. So during bullish periods, whether we're just talking about one day or several days, TQQQ will roar up on huge volume. And during bearish periods, it can go down very, very quickly as well, even during the course of a single trading day. There are times when large institutions decide to dump millions of dollars of Nasdaq-100 stocks, and it leads to big drops in the TQQQ, which of course uses leverage to be 3 times the daily price movement of the Nasdaq-100 or the QQQ ETF. If you enter a TQQQ trade at the right time, you can quickly make a lot of money. So let me show you a great example of this on the daily chart of July 10th. TQQQ opened at $76.11, climbed up to $76.24 in the first minute, and then totally collapsed in a heavy volume sell-off. Now, this is the sell-off right here where this arrow is showing you where the low was. Okay, so we were here, 76.11, we got up to 76.24, and then boom, all the way down to $74.33. That is almost $2 a share. It was most likely institutional selling because look at the volume spike right here that we had. Compare that with the volume on the previous red candles. Okay, about twice the amount. Anyone who bought near the bottom here with at least 800 shares or more would have made $1,000 in only 2 to 3 minutes, because when it sold off all the way down here to 74.33, buyers stepped in and immediately pushed it back up. If you were able to get in on this trade, I'm not saying you had to have the exact bottom, but if you got in anywhere along this big wick line here, you would have done very, very well. You could have made $1,000 in only 2 to 3 minutes, as I said, holding another 15 minutes. All right, which is these 3 green candles here, would have increased your profit another 38 cents per share. And those who held all the way to here, this yellow arrow pointing, would have been up to $77.27, almost $3 per share off the low right here. Okay, there were 3 million shares trading hands right here on this bar. And if you got in anywhere here, you could have done fabulously for the rest of the morning and into the afternoon. And even though it sold off a little bit near the close, you still would have had a tremendous profit if you had held for the entire day. Here's another example of a sharp sell-off. Okay, we have this long red candle right here to the right of this white arrow, and it's very heavy volume again, as you can see, compared to the other red these are 5-minute time bars. Look at the volume spike. And there is a slight wick on the bottom, not the very long wick that we had on the other one, but you start to see that we get a very lucrative bounce back here where we get 6 consecutive green candles going straight up to that 20 simple moving average for over the next 30 minutes. That's another example of where a long red candle led to a heck of a rebound. And here's one more example. Now notice we do have the long wick on this one, okay, meaning that the price came all the way down to the bottom and then buyers stepped in, showing support, and we closed back up here. What we want to do is we want to look for the hammer. Now, those of you who know about candlestick patterns, you know that a hammer is one of the most bullish candlesticks that there are. And what happens with the hammer is we have a short upper shadow and we have a big real body right here, and then we have a long lower shadow here. So basically what happens is the price comes all the way down to the bottom, buyers step in and support the price, push it back, and it closes somewhere in here. So as more buying takes place, this wick forms, the candle closes near or at the top of the candlestick. This is very bullish. When you see this candlestick, it's almost always followed by further green candlesticks going higher. Well, if you want to see more strategies like the one I'm going to describe in this video, don't forget to check out my website, TQQQacademy.com. This site is filled with informative and affordable full-length courses, mini courses, and ebooks on TQQQ and other financial assets as well. I will leave a link for you in the first comment below this video. All right, now we're back. Notice the heavy red volume again on this particular hammer. We don't buy after the first few long red candles because they don't show a wick and they don't show a double bottom or the green candles going up or any other such thing. But we wait till we have that long pullback and we start to get that wick showing that we're coming back, we have support. And once we form this hammer, it's a great time to buy. Even if you get in near the top of the hammer candlestick, it doesn't matter. Look at how much upside you have after that. Here's another long red candle, a different day. Very heavy selling volume, again, compared to the other red candles, compared to the green candles as well. Okay, so when you see that, you know it's got to be institutional. It's not mom and pop selling their 100 shares of, of Nvidia or TQQ. It takes a big institution for a lot of volume to put in a big long red candle going down like that with that wick coming back. Here we had 1, 2, 3, 4, 5, 6 green candles in a row following this red hammer here. Here's a slightly different situation. Here we didn't have a hammer, but we had a double bottom, okay? So it came down and it closed right down here, and we got in and it was the same price. It didn't go down any. There was support at both around the same price, and we came back up. And, you don't have to be that aggressive and try and get in over here because, after all, it could go lower. If you want to wait until you reach the top of this candlestick, that's fine, because look at the follow through that we have for the rest of the day. All right, even a double bottom entering like this can bring you easily $1,000 within the next 15-20 minutes as it goes higher. Here is another situation where we get a long pullback, this time to the 20 simple moving average. That's this red line here. The blue line is the 8 exponential moving average. Those are the two moving averages I use. And in this particular case, TQQQ was doing fine in the morning, and then suddenly we get this pullback, okay, on fairly heavy volume here. Again, you can see that we have a higher volume bar. And when we hit the 20, we find support there. It bounces back. The next candle after that is green. So that's the kind of thing we're looking for as well, support at the 20. Sometimes you get it at the 8, but if you get it at the 20, it's even more pronounced. All right, so the hammer for quick gains later that same day. Here is the red candle that we talked about before, and here's the couple of candles moving higher after that. From the low to the high of the third green candle was a 60-cent share. That's down here. We have this other hammer. All right. So what happened was we had a cross under. The 8 crossed under the 20, and that's normally bearish. And you do see this big red candle here, and then it's followed by this, which was probably red to begin with, but then found support and came back up and closed higher, making it a green candle. From there, we went up 60 cents per share in just a couple more 5-minute time bars. Now, we can play it safe. Okay, it all depends on the type of trader you are. Sometimes when I have a really good quick profit, I would rather pass on the opportunity to make even more money than to give back the profit I just made. So when you buy, just as the rebound begins on a long red candle, it's sometimes better to exit the trade near the close of the 5-minute time bar. That was the case here, as there wasn't much follow through. It actually went a little bit lower before going just a little bit higher and then getting caught at resistance at the 20. But each trader has to decide their own tolerance for risk. If I can make 40 or 50 or 60 cents on a bounce back off the low here to the high where that hammer candle is, maybe I'll be satisfied with that, and I don't even want to go further. It just depends on how adventurous or how conservative you are. But here's why most traders get it wrong and don't really take advantage of these kind of opportunities. Usually when most traders see a long red candle on heavy selling volume, they assume that another one or more red candles will be next. They become too afraid to act, and so they miss a great opportunity to buy TQQQ off the low. Now, it's true that there are times when you will get 3 or 4 long red candles in a row, and we don't want to try to catch the proverbial falling knife. However, when we begin to see the rebound off the low and that wick, or also call it a tail, forming, that's the time when we can enter a fast market order with more confidence, because the market is showing us that we have hit support. So we ride the rebound up, and depending upon your inclination as a trader, you can either grab the fast profit near or at the close of that 5-minute time bar, or you can hold your position a little longer to try to grab a larger profit over the next few time bars. And that's where you want to kind of check it out, whether it's a green bar following that hammer or if it's a red bar, okay? And that might also help you make your decision whether to hold longer or not. So who gets it right? You know, there are hundreds of thousands of TQQQ traders competing against each other every single day. Many large institutions are running algorithms that automatically put in buy or sell orders when markets become too extreme in either direction. Okay, the algorithms are not emotional. They're automatic. Unlike humans, They're never too afraid, and they're never too greedy to act. They're simply set up to catch prices that have become too bullish or bearish, and then they just trade them in the opposite direction. But just because we are human beings does not mean we cannot act as if we are unemotional algorithms too. Remember, TQQQ has repetitive patterns every single week. We just need to know how to spot them and then act boldly. So here's a tale of the tale. On February 13th, 2026, TQQQ hit a low of $47.18 right here. But the tail formed and the candle closes. It's a hammer. 2 hours later, boom, 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 boom. The price is about $2 per share higher. Did you have 1,000 shares? You just made at least $2,000. Did you have 500 shares? You just made at least $1,000. In fact, a good part of this whole trade here was actually done right here. And if you were able to sell somewhere around here where the resistance is, you know, we're always going to get some resistance at the 20, or sometimes we get just a little bit above that 20 and the resistance hit. So if you were able to get in down here and then get out here, you got most of this longer trade anyway in just 5 minutes. All right, now here's a chart showing a very long red candle going down. On October 29th, 2025, around 2:45 p.m., a long red candle sell-off dropped TQQQ from $120.40. Remember, that's before the split, down to near $118.10 in less than 5 minutes. A lot of institutional buying. That was the peak of the market right there. So, if you saw this, would you buy? Would you sell? Would you hold if you were already holding a position? Or would you just hold off, sit back and do nothing? Okay, well, let's take a look at what did happen after it dropped us down $2.30 to $1.1810. Well, TQQQ closed at $120.62 that day, about a $2.50 per share gain from the bottom of the wick on that red candle. And it happened in just about an hour. All right, so remember, when you see the long red candle, don't get scared. Just wait and see if that wick forms. If it forms, it's a great place for an entry. If it doesn't form, you have to wait and see if the next candle gives you a double bottom or if it's going to go lower. You want to hold off if you're not in that particular case. All right. Always look for those hammer candles if you want to make fast money buying and selling TQQQ, like my little chubby friend here. And now this is Ethan Roberts from Mastering TQQQ Trading saying, happy trading, hope you are successful, and I'll see you next time.